It sure looks like the Euro-Canadian dollar Forex pair could bust out of the seams any time now. Hang around and I'll show you what I mean. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a bull flag on the Euro-Canadian dollar Forex pair. It could bust out today or next week sometime. I'll show you that in a few minutes. But first, we had quite a few triggers this week. I'll update you on the active trades, and later on we'll go back almost to the beginning for today's trading maxim. Happy Friday. Let's get it. Remember to click the subscribe button and hit the bell so you won't miss any of these great trade setups. Let's have a look at the active trades. I warned you that Tesla could trigger this week, and guess what? On Monday it did. Right there. I'm in at 898.10 with a stop loss of 838.46 and a first target of 937.86. We got a buy trigger on the McDonald's setup that I showed you on Monday. I bought this just ahead of Wednesday's close right here at 193.29 with a stop of 185.96, first target of 198.18. This was very close to 100% volume, but not quite, so this is a half-size position. This US dollar Mexican peso working out really nicely right here. Looks like we may have a little bit of a pullback right here with this wick and this bullish candle, but hopefully it's just taking a breath. In any case, parabolic SAR has finally gotten below our break-even stop. I have moved the stop loss down here to 23.29.92 to lock in a little over 450 pips right here on this one. This is the Royal Caribbean Cruises daily chart. Hit our first target right here on Thursday, so I closed half of the position for profit, moved the stop loss up right here to break even on the second half. Now we wait for the PSAR to move above that level so we can start trailing the stops on this. The US dollar Swiss franc hit the target right here on Tuesday, and I closed half for profit, set the stop to break even on the remainder right up here, just like the RCL. We're waiting for the parabolic SAR to drop down here so we can start trailing stops. And lastly, the Canadian dollar Japanese yen hit our first target right here on Monday, and as before, took half off, set the stop loss to break even on the second half, and we'll follow the stops as soon as the PSAR gets up there. And that's it for the active trades for today. Let's take a look at today's pick. I know you guys prefer Forex setups, and I've been everywhere else for the last couple of weeks. So today I've got a bull flag set up on the Euro-Canadian dollar to make up for that. I'm recording this video on Thursday night, so this thing could break on Friday or sometime next week, so keep your eyes on it. Here's a daily chart of the Euro-Canadian dollar Forex currency pair, and it's showing a really nice looking bull flag. A bull flag consists of an incoming uptrend like this one here, and then a descending parallel price channel like this. A bull flag is a bullish consolidation, so I will only take a buy trigger on this. And the pattern is confirmed by a decline in volume and volatility down here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to buy a daily candle close above the bull flag. On the breaking candle, we want to see the volume bar reach up here to the volume average. If it doesn't quite reach the average but does reach 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by taking this volume number, dividing it by this volume average, and you should get at least 0.75. If you don't get at least 0.75, I recommend that you stand aside on this trade. Our stop loss is 1.5 times the ATR. Our first target is 1 times the ATR. So let's say this breaks up to here and we get a close right here. Just ahead of the close, you buy for your entry. On that day, you look down here at the ATR, you multiply this number by 1.5. You measure that distance behind your entry, and that'll be your stop loss. You'll measure 1 ATR above your entry, and that'll be your first target. If after entering the trade we get a candle close back inside the bull flag, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the flag should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically, I do this using two positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. That's today's setup on the Euro Canadian dollar. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, a deep dive into the archive for our maxim of the day. Tim's trading maxim number 2. There will always be another trade. Don't get what we in the business call FOMO. FOMO, the fear of missing out. If a trade doesn't meet your criteria, don't take it. If you miss one, or you're late for one, or whatever, that's no big deal. There will always be another trade. Don't compromise your rules just because you're afraid you're going to miss something. And remember our Euro Canadian dollar trade plan for today. We're going to buy a daily candle close above the bull flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the daily ATR, and your first target is 1 times the daily ATR. And remember to click the link below to the trade management video for more details. Also remember to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I'll send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put a link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. Don't miss the next installment of the Trading Education Series next Wednesday when I'll discuss what is swap in currency trading. As always, thanks for watching, thanks for subscribing. Don't forget to hit the thumbs up below. Have a great weekend, and I'll see you on Monday.